Hello. In this video, I want to talk about scalping stock indices. Before I talk more in depth about scalping, I would like to make a couple of things clear. The scalping I'm discussing in this video is the kind of scalping that's legal. There are brokers who will define scalping as the act of trading one broker's price in a product against another broker's price in the same product. And this is sometimes known as latency arbitrage, whereby perhaps one broker's trading prices are lagging behind the tape, maybe because of volume, maybe because of volatility. It happens. And the brokers that are catching on to their clients, creating latency either through IT manipulation or simply taking advantage of very fast prices. They have every right to shut down those clients, in my opinion. But that's not what I am referring to when I talk about scalping. That kind of scalping, which is often the expression that is used by brokers to define the illegal act of latency arbitrage, that is obviously not what I'm discussing here. Point number two, there are brokers who has a timer on their platform, and what that timer does is to stop the trader from entering and exiting a product within a very short time frame, which could be defined by the trader. So for example, one broker that I use very frequently will not allow you to execute another trade in the same product within a 5-second time span. So depending on the time frame of the broker, if at all they're using it, that's clearly not going to work for you. You need to, when you're scalping, trade with a broker that will allow you to enter at 1 second past the minute and exit the trade at 4 seconds past the minute, if that's what the chart is dictating to you. That you have to sit and wait for 5 seconds or 30 seconds is not going to work for you. In order to make scalping work, you need also to trade with a broker that has a very tight spread in whatever product it is you wish to scalp. A journalist in Denmark, Peter Thurman, he did an outstanding work in describing the CFD brokers globally and their spreads. You might want to take a look at that. I think you can find it on my website, TraderTom.com. So as we move on, just to sum up this page here, the kind of scalping that I want to discuss here is legal scalping, decent scalping. Some thoughts on the matter of teaching scalping. Scalping is an art, but if you want to attempt to teach an art, you are faced with an uphill struggle, because how do you teach gut feel? How do you teach the sum of all your experiences? So what I want to attempt here in this video is to put some numbers on the art, and by putting numbers on the art, I'm hoping to achieve what I consider to be transparency for you. Because it is no good that I create an educational video which makes use of phrases such as, oh, you need to feel your way, or you need to take a look at the overall chart and get an intuitive feel for it, or if I litter the presentation with, well, my gut feel told me to do this, or you just gotta try and feel your way. I'm sympathetic to sentiments such as gut feel, because I think over time you develop an intuitive feel for the market. But I don't think that's going to help an individual who seeks to understand perspectives of scalping. So before we continue, you also need to appreciate that what I'm showing you here is just one of many ways to scalp, and it's just one of many ways the way that I scalp. And hopefully in time, I will be able to illuminate other ways of scalping for you. Um, do I scalp a lot in my day-to-day trading? No, but I scalp a fair bit because I often find that it takes my mind off being in bigger positions. There's this great story about one of the greatest traders. His name is Hofstadter, and he was known to trade right up to the exchange limit in terms of contracts. And one day, one of his clerks walks into his office and see that Hofstadter is absolutely focused on the screen. And he says, "Am I disturbing you?" And says, "No, no, not at all. Come on in. I'm just scalping pork bellies." And the clerk knows that Hofstadter's usual arena is wheat and corn and soybeans, and says, "Well, what are you doing trading? What are you trading pork bellies for? I thought that your big thing was wheat and corn and soy." And says, "Yeah, I am, but I'm trying to take my mind off it by scalping pork bellies." So it's just a little perspective that scalping, while lucrative, might not be my be all end all when it comes to trading. But I find it, dare I say, I find it exciting, and I'm quite good at it, and I make money from it. Why don't I make it my be all end all and just scalp if I'm so good at it? Well, because I make more money from running positions over a longer period of time. And I'll tell you this right up front: scalping is perhaps painted to be exciting and perhaps has um, some parallels to high stake poker trading, or perhaps a bit casino style. Not proud to admit that, but I think that you need to know a few things about what I'm about to show you. A, it's pretty intensive. So if you want to scalp, you gotta make sure you're well rested. You gotta bring your best game to make it work. I am demonstrating this on the FTSE 100 index. You could do this on Eurodollar or on Dow index or on the DAX index. But depending on what you are trading and the underlying volatility, it may also mean that you need to be able to stomach some bigger drawdowns. So one of the advantages of trading the FTSE 100 index is that while it has volatility, it is maybe not as rampant volatility as you see, for example, in the Dow Jones index. Also, the difference between the two indices is that one is trading around 25,000 and the other one is trading around 6,000. So because of the lower number in the FTSE, it also somewhat dampens the volatility. Now, I trade the FTSE index on a 0.4 spread, and quite frankly, I haven't seen any brokers anywhere in the world that offers this kind of spread. So you might want to be mindful of that. If you're trading with another broker and they're offering the FTSE at say 0.8 or 1, or I've even seen it at 1.5 and 2, I don't think you can scalp the FTSE index on a 2-point spread. And finally, just so there's absolutely total transparency, I will at times add to a losing trade as part of an overall strategy to get a slightly better average price. It's not something I'm proud of, but it is something that I found by necessity enables me to get better results. Does it mean that sometimes I get it horribly wrong? Yeah, it does. But more often than not, I don't get it horribly wrong. But hopefully, as this presentation unfolds, you will get a much better insight into scalping and how I scalp. So let's carry on. Let me give you an example of some scalp trades. Below is a screenshot from my trading account. And what I want to draw your attention to, let's see if I can embrace the technology of the 21st century by bringing up a Maybe a laser pointer. Yeah, that would be a good idea. What I want to draw your attention to is the open date and the close date. Well, now what I've done here is I've actually deleted the date so you don't get confused, so you just get the time. So you'll see here that I'm entering a trade at 20:03:41, so that means 3 minutes past 8 and 41 seconds into it, and I exit the trade at 20:05:10. So what you'll see here is it's not quite chronological in entry time, but you will see that my entry times, and over here you'll see my exit times. Now, I think it would be a good idea if I showed you these entries and exits on a chart. Now, the motive for showing you my account, and yeah, I just highlighted something in green. Yes, ego prevails in all of us, and while I like to portray myself as a saint, I also know that at times my ego gets in the way of even better trading. I'm showing you an example with more winning trades than losing trades, but I will hold my hand up and say, hand on heart, that I at times too balls up my trading in a rather major, spectacular fashion. Sometimes I even do it publicly, and I am left quite publicly humiliated. And continuing here, I'm left licking, licking my wounds. And I'm saying this because I think it may just make you feel somewhat better. You may look at my results thinking, I'd like to replicate that, and who wouldn't? You know? However, none of us go through this profession without a good kicking every now and then. But I have this philosophy that as long as we learn from it, it will make us better traders. So in essence, losing is winning. And also we have to differentiate between, did I lose but I followed all the rules and all the plan and everything? I did it perfectly, but the market just didn't do what I had expected to do. Well, then there's not the great need for self incrimination. You can simply chalk that up to, it didn't work, let's move on. But at times, if you lose your emotional equilibrium and you know it afterwards, then it might be a good time just to pause and reflect. So you need to differentiate between, did I lose because I ballsed it up badly because of me not following the rules, or did I lose just because the market doesn't agree with me? Well, if it's the latter, just move on. So the reason why I'm showing you my account is make you also realize that scalping might not be this frantic activity you thought it was. So you'll quickly see on the entry and the exit times that I'm holding the positions for more than just a few seconds. I'm holding it for a few minutes. Now, this is taken from an evening session, which means that I often have to wait a little longer for the market to move. And had I traded during the day, the entry and the exit times would be somewhat shorter, but not necessarily much shorter. So on the next page, I'll show you the chart with the entry and the exit points plotted. Now, I don't particularly want to go into a great detail why I shorted where I did, and why I added to the short position here, and why I exited it here. Suffice to say that I am trading or approaching scalping quite similarly to how you would approach any chart in any time frame. So just because I'm scalping doesn't mean that I don't pay attention to a double top, which is the reason for my entry here. And what you can't see here is that there is a double top somewhere over here. And what you're seeing me doing here is selling weakness. You have a very potent move higher, which pretty much immediately fails. And somewhere along the line here, I decide I want to start selling short here. And as the market moves a bit further in my favor, I'll add to my position. And why didn't I get out down here? Well, because I'm not that good. And why didn't I get out here? As I said, I am not that good. I'm the one who exits about here, after which the market falls further. So there you go. Certainly not a perfect trader. I wish I was. Why am I exiting here? Well, as I said, it's scalping. It is not position trading. And if I can get a quick 3, 4, 5 points, I will take it. If I'm out of pocket by 3, 4, 5 points, I'll be quite prone to just get out of the position and start over. Why didn't I wait till down here? Well, without being too hard on myself, there may be a little bit of introspection needed on my part as well. One could quickly argue that we are in a trading range here, and perhaps I should have held out a little longer and attempted to get down in this area instead. But you know, I am not in the business of being too hard on myself. I am pretty hard on myself, but I don't need to punish myself on every single trade where I couldn't have got a few more points out of it. I did okay out of it, and for the purpose of scalping, I am not looking for perfection. I'm not looking for perfection in any trades whatsoever. So now that you've seen the trades plotted on a chart, I'd like to move on to the next slide, because what I want to do is show you a blank chart. I want to show you a chart of the FTSE starting from approximately just 10 minutes before the market opens. This is based on UK time because that's what my PC is set for. So even when I travel, it still picks up UK time. Don't ask me why. And then I want to show you the FTSE over the following 90 minutes. But what you need to be aware of here is that the time frame I've selected, I've taken this actually from ETX Capital's website from their trading platform, even though I in this case haven't executed the trades with them. And the reason why I've taken it from them is because they offer a time frame which is quite brilliant. Now, brokers globally are getting better and better offering ancillary services to their clients, and ETX is no exception to that. They offer a chart time frame down to as little as the tick chart. Tick chart is not necessarily to demonstrate this. I've chosen the 30-second chart. So every single bar that you're seeing on this chart, every single little candle bar is 30 seconds worth of trading. So what you see is the market falling, rallying, falling, rallying, falling, and so forth. But what I want to do now is I want to dissect this as a forensic expert, not for the benefit of appearing like a smart guy that knows what's going to happen. Rather, I want to dissect the chart forensically because I have a thesis to put forth to you. And that thesis is that if you understand the fragmentation of this chart, i.e. how it is broken down, its small components, you can take that information and you can use it to your benefit. So let me show you the next chart. So what I've done here is the same chart, but now what I have done is I have broken down the individual moves into their respective points. So what I mean by that is that the move from this low to this high is 34 points. The move from this high to this low is 37 points. And the move from this low to this high is 21 points. So let me just read through what it is I'm doing here. This is a 30-second chart from ETX Capital. I use them for a visual demonstration purpose for your benefit. I consider myself somewhat of a card counter, as you would see them in the movies like Rain Man and whatnot at the table in Las Vegas. So what might we learn from this chart? Well, your eyes are as good as mine. So if you spot something that I haven't seen, by all means send me an email. My email is hello@tradertom.com. What I want to show you is how I scalp today. So the numbers you're seeing, the plus and the minus, are not my point score. It is the size in points of the movement up and down on the chart. I'm not paying too close attention to the open because the open has a lot of built up energy. Do you remember the movie called Gladiator with Russell Crowe? It's in the beginning of the movie, and you know he's prancing around up there in Normandy fighting the heathens or wherever it is in the world, and he says to one of his commandeers, "Upon my signal, unleash hell." Now, when you're looking at the open in Europe, that "upon my signal, unleash hell" is the open of the stock exchanges at around Europe around 8 a.m., 9 a.m., depending on where you are based in the world. You will have a lot of people that would want to execute their orders as quickly as possible. Some people want to get in quickly, some people want to get out quickly, some people on the wrong side of an overnight move and they have a margin call. Some funds will have to repatriate funds, so they need to raise liquidity, they need to raise cash. All of this happens very, very quickly. So oftentimes you'll see quite a chaotic open. But as the open makes way to more controlled trading within the first 15-20 minutes, the market begins to display an order. So if I'm starting from 8:21 a.m., which is around here, 8:21, the market pushes up 19 points. I haven't actually written that down. And then a small 9 down. And then at 21 up for a total of 32. Then minus 14. Then up 31. Then down 20. And then up 27. I haven't shown that. With a few minus 7 and a minus 6 along the way. Then minus 12. Then a double top, then down 17, up 9, down 17, up 10, down 7, up 10, which is not shown, down 9, up 8, again not shown, down 12, then plus 15, minus 12, up 14, not shown, down 11, up 13, down 6, up 13, and this high here is as far as the chart goes. So the last high is 5,447, a plus 13, which is also a double top, and the market reacts very violently to that double top by selling off. And actually this is the most consistent sell-off that you are seeing throughout the morning, with the exception of course the open, what you're seeing over here. So armed with the information that we have already seen, how might we scalp or short-term trade the market as the morning progresses? See, now there's no help. You know, what we've done here is we've just been masters of the benefit of hindsight. You know, we sat here and we observed the market. But my motive for showing you this is to attempt to draw your attention to the swings that you are seeing, because those swings have a tendency to repeat the same numbers over and over. So we know that during the sell-offs, the counter moves tends to be somewhere between 9 and 12 points. So during the sell-offs, for example, we have a sell-off here. We're seeing the counter moves as 9 points, 10 points. We also know that during the rallies, the small counter moves are about 6 to 7 points. So during the big pushes up, we're seeing a 7-point retracement, a 7-point retracement, a 6-point retracement, here a 9-point retracement. While bigger corrections, if you can call them that, are somewhere between 9 and 14 points. 9 points, 14 points, with one 20-point correction. So we are seeing from 821 up to this move here, a decent rally where the corrections against the rally are 9 points, 14 points, 20 points, 7, 6, 7, 12 points. While during the rallies, we could expect, so the key number to look out for during the counter moves in a declining waves is about 9 to 14 points. So when the market are pushing lower, we expect the counter moves to be somewhere between 10 and 14 points, 9 and 14 points. While during the rallies, we should hone in on the smaller moves of 6 to 7 points with the possibility of a 12-point move. In essence, what I have attempted to do here is to deconstruct the chart so that you're not faced with this kind of chart thinking, oh, well, that wasn't exactly a 38% retracement or 61% retracement, and well, that wasn't a double bottom, so I couldn't have bought that, and why should I have bought there, and why should I have sold here? That's not a retracement. There's no resistance here, or there's no resistance here. By doing it this way, what you are attempting to do is to let the pattern of the chart, as it has already unfolded during the trading morning, to let that be your guide for the following hour or 2 hours. So what we're about to do now is we're about to leave this chart here, where the market at 5447 has made a double top. The market has declined and has just put in a 10-point rally. My argument here is that during the declining waves, we will be looking for counter moves against the decline of somewhere between 9 and 14 points. And this 10-point move here would fall into that category. Now, how does that help me as a trader? How could I possibly benefit from that? The short answer is that I would have anticipated the market would repeat the previous patterns. Therefore, if I see the market rally more than 9 points during a sell-off, I am ready to scalp short. So let's take the next chart. So we left the chart here, this double top, which is about 9:16 in the morning. And that's this point here. What I want to show you now is how, armed with the knowledge that we derived from the previous chart, where we defragment, if you like that posh word, deconstruct the chart, you will find that that will be to your benefit when you try to place profitable trades. So what we're going to do now is we're going to deconstruct this chart as well. And hopefully you will see that the things that I showed you on the previous chart is also happening on this chart. Excuse me. So we're starting again here at 5,447, which is our reference point from the previous chart. Just quickly show you up here, 5447. So this is where we start. And here we go. The market declines 22 points. Would we have been buyers on the way down? I'd like to think that we would have used some of our technical analysis skills and have spotted this as a double top. The market falls 22 points. Not completely unlike what we saw over here. The market rallies 10 points. Now remember, we are looking to sell short counter moves during the sell-offs of 9 to 14 points, while we are looking to buy into rallies on small counter moves against the rallies of 6 to 7 points, but with the caveat that sometimes the moves could go to as much as 12 points. I would be looking to sell short the FTSE once I spot that the market has moved more than 9 points off from a low. Is this demanding? Yeah, it is, because you constantly mean that you are focusing on what is the most recent low. Okay, the most recent low, we've just moved up 5 points. Does that want me to make me sell short? No, I need to see it go at least 9 points. Oh, well, now we're up 8 points, 9 points. Okay, I am ready to sell short now. Do I sell short right on the nose of 9 points, or do I attempt to get as good a price as possible? In there lies the art of scalping. You have a rule of thumb now based on what you have spotted so far during the morning, but whether you execute a trade right now, or you're hoping for a better price, or you have to accept a worse price, that's trading. The market then declines 13 points. I'm not saying that I would have envisioned that it was going to decline 22 points or decline 13 points, but what I am arguing is that if I have a strategy that attempts to sell short any counter moves that are falling within a range of 9 to 14 points, well then 10 points and 12 points amply qualify for short scalps on the short side. The market then falls 20 points. Now those of you who are adept at chart reading will probably spot this and this as a measured move. The market then rallies 12 points, and again I am ready to sell short. The market then declines 15 points down to more of a double bottom than we, for example, saw here versus here. The market now rallies 17 points. So say for the sake of the argument that you had now sold short the market at minus 10 points. So you spotted the market going up 10 points, a little bit more than 9 points, and bang, you are now short. Where's your stop loss? Where are you going to place your stop loss if you are on the wrong side? What you need to know is two things. One, I wouldn't necessarily hesitate adding to a losing trade if I still feel from a chart point of view that the market is still in a trend direction. However, if that is a stretch too far from you for you, I perfectly accept that. But then I was going to say to you, then if you are in doubt whether you're on the right side and the market is about to stage a bigger rally, then get out. If it feels wrong to you, get out. There are plenty of points to be made. So you don't need to sit and agonize over one that goes wrong. Now my comments up here is, now the FTSE stages a bigger rally, 17 points. Is that an alert that there's more upside coming? Well, it is trying, but it is only managing a double top. The double top from here to here. That's still a double top. Some people will say, well, actually it goes a little bit beyond the double top. True, but what is it that Al Brooks says in his price action course? Close is close enough. I quite like that saying. It doesn't have to be an absolute beauty of a double top. You can accept 1 or 2 points above an old high. But I am not neglecting my responsibility as a responsible trader and instructor to you. So if you have sold short at a market rally of 10 points and you are now 6 or 7 points offside and you don't feel comfortable with that, then get out. Just this is so important that you also learn to take losses quickly. It is very, very important for the longevity of your health as a trader that you don't sit and argue with the chart and going, well, you shouldn't be up here. If it feels wrong to you, I'd like to say that maybe you should develop a little bit of ice in your belly, but it will come with experience. It will come with time in the trenches, so to speak. For now, if it feels wrong, get out. The market then declines 6 points, and the mere fact that it declines 6 points sends us an alert, because we also focused on that during rallies that the market has a tendency to fall by smaller amounts than it rallies during the declines. So the mere fact that it declines 6 points doesn't necessarily tell me that I need to be on the long side. But the fact that it declines 6 points and then moves back up again makes a little alarm bell goes off in my head going, well, hang on. This market now is beginning to show signs that it wants to move higher, because instead of having the normal decline that we saw here, we're actually holding here and we're going into a bit of a holding pattern. I know we're talking about a 30-second chart here, and so this is chart analysis on a micro perspective rather than on a 5-minute chart. The FTSE stages a small rally, does a double top, then falls 12 points. After which, in my book, if this was still a decline, I would have liked to see the market fall even more, but it's not happening. It's beginning to show signs of that it at least for now wants to move a little higher. So had I sold short here, well, I might have been out here. I might have actually sold short the double top. But I can almost guarantee you that somewhere around here, in this area here, where I would have expected the market to fall even further, the fact that it's not doing that makes me suspicious that there is more upside coming. Now let's take the devil's advocate argument saying here, well, actually we're beginning to see this as a low, as a higher low, and now we're beginning to think we should be buyers. We are observing a 6-point decline, which falls well within the parameters of us trying to buy 6 to 7 point declines in rallies. The market then pushes higher by 12 points and then falls about 6 points. I argue right here we should be buyers as well. I haven't put in the point count, but actually this is a 6-point decline. This is a perfect example of a trade that looks good within the first 30 seconds to 1 minute, and then it begins to deteriorate. And the market stages its or displays another big decline of 15 points, much bigger than the 6 points that we had expected during a rally. So immediately it begins to tell us, well, hang on, maybe the downtrend has resumed. Is this too confusing? Is it too iffy? If it is, well, send me an email. But I will say one thing, is that as a scalper, you need to cultivate the art of changing your mind very quickly on direction. You could go from being, okay, I think this market is headed higher, and you don't even want to put a time frame to how long you're going to have that opinion. That opinion can last the next 10 minutes, the next hour, or in this case, it lasted somewhere between 2 and 3 minutes, after which the market began to decline again. It might be then that you are now saying, well, hang on, we are back in declining mode, and I am going to sell short this 10-point rally. In this case, it worked out. It didn't work out so well over here, but here it worked out quite well. Now, what I haven't shown you on this is because when I took this screenshot to prepare these notes, this is where we ended. But what actually happened shortly after was that the market rallied 12 points, declined 8, and rallied 10 points, and then fell lower. Okay. So what I'm going to do now is I'm going to let you digest this, ponder on any questions that you may have. I have already tried to trade this live. There's a video out there of me doing this in real time in live. I think if I was watching this for the first time, I would be skeptical. I would go, hang on, he's just selecting a chart that fits his theory, his thesis. But I can't completely run away from that argument, because the market will do what the market will do. Sometimes the market will display a trending scenario. Other times, what we're seeing here is more range bound. So what I would like to do now is I'd like you to think about how you could make use of this in your own trading. And in the meanwhile, I will then prepare the notes for, call it the advanced lesson, because this is the DAX. This is the DAX on the 32nd, like what you saw on the previous chart, which was the FTSE. And then what we'll do is we will deconstruct this chart here, and hopefully you will be able to see that some of those characteristics that you saw on the FTSE chart, you will also see on the DAX chart. Yeah. So for example, just a very quick example. What you're seeing here is a 15-point rally in the DAX against a backdrop of a 40-point decline. The market then falls again, does another 15, 18-point decline, and then the market falls away, does a 15-point rally, and then falls away, and then the structure changes. Had you shorted here, you would have lost, or you would have decided, I probably need to get out of this. But here, you would have had a very good trade. And the same for here, and the same for here. Right, I'll leave it at that. This video turned into be a 43-minute session, a little longer than I had expected. I welcome your questions. I haven't actually prepared a slide with my email on, so you're gonna have to make a little mental note of this, but it's hello, HELLO, at TraderTom.com. Hello at TraderTom.com. All right, I'll see you in another video shortly. You take care of yourself.